Good morning, everyone. My bad for a bit of a delay there, but we're good to go. So happy Wednesday. Let's get diving on in here. But if you got anything you want to take a look at today as far as setups go, just start dropping those in the comments, and we'll get towards those. We'll get to those towards the end of the prep here. But we'll start here. So here's a spreadsheet where this is kind of our home base for our mastery. So here's our current game plan as of yesterday and as of today. At this point, we're waiting for a dip to the 21 EMA in the indexes before making our next round of decisions. Now, that could be, we get the dip to the 21 and we're looking to get long. Potentially, we slice through that 21 EMA like butter, and then maybe we're looking to short here. But in terms of making those next round of decisions, we are looking for a move back towards the 21. And until then, we're focusing on weekly income trades. So put credit spreads, iron condors, the rare earnings trade on something like a Netflix, those kind of weekly plays in the interim while we're waiting for a dip here. And that's where I think your next round of decisions is going to be easy there. There's a lot of things you could get long right now, but you're doing a little bit of chasing. So if you're bullish on NVIDIA, and I like the setup here, the market coming in a little bit should bring NVIDIA in a little bit. I think that offers a better entry. The AMDs of the world, the upstarts. So great looking trends here. Whole bunch of bullish momentum. AFRM, that's obviously another one here. There's plenty of things I would like to get long, obviously. You got to throw Tesla into the mix here, but they're all too extended. So I'm pretty much breaking every rule in my book. If I start getting long Tesla, Upstart, etc., it +2 to +3 ATR. So of course the market doesn't have to pull back to the 21, and I might just miss another week of upside here. But I do think probability suggests potentially you could come in at least to the 8 EMA, and even a dip to the 8. If we're looking to get long, I think that provides you with a bit more opportunity. Now, in terms of playing the downside here, you've got to give this market credit. And I think a good market, kind of stressing the importance of not marrying your ideas, so to say. So for example, a few weeks ago, there's a bearish daily squeeze here in IWM. No stacked EMAs, a bunch of red 10x bars. You had the structure for a good short there. So we sold the call credit spread. Structure changed, though. You're back above your 21. You have positively stacked EMAs. There's a positive histogram. So we bought the spread back at like break even. Really small profits. Can't marry ideas. Can't marry your ideas. But in terms of short in this market, and there's a few different perspectives here. One perspective which John has given in the options room, which is interesting. This is kind of a mirror image of last October, where you get your first little flush, they rip it right back towards the upside, and then you get your next flush. Now, it's not to say history has to repeat itself, so I think you focus a bit more on structure here. And regardless of what happens over the next 2 to 3 weeks or so, you have to at least respect this structure. You're back above your 21. We're literally firing a daily squeeze to the upside, and there's positively stacked EMAs. So in the event I think we come back here to the mean, I think you at least you look to see if the 21 holds a support, and I think with that structure there, you do be open-minded to looking at the NVIDIAs, looking at the Teslas. I just say this to say things were looking pretty nasty over here, so it's super easy to get that bearish mentality. But if you kind of just focus on structure, on your next dip here, I do think you want to give the market a bit of a look to the upside. If we happen to just dump under the 21 EMA, then I think we're going back towards those lows there. So a few things to keep an eye on. And as we're looking at 1, 2, 3, you could call it 5, I suppose. 5 really solid days of upside. What you're going to get there is volatility dying down. Now, I do think you want to keep an eye on this chart here because this is typically where folks are going to start to get lulled into complacency. It's been a super bullish market. Market's back towards the highs. everybody starts getting a little bit comfy here. But if we take the support level of 15 and change, you can get these pretty nasty pops right off of support, which the way I look at it is basically it's catching everybody slipping. The market lulls you into comfort, right? Get back to buying the dip, get back to getting long, buy calls on everything, and then they quickly pull the rug out from underneath you. You kind of back towards comfort, and then they smoke you. You back towards comfort, they smoke you, they smoke you. So I do think as VIX comes down towards that support level, you're going to get that really solid bounce in the market. From my point of view, that's the easy money. Is the market's getting extended here, and now as VIX is at the bottom end of this range, I think the easy upside could be dying down a bit. Now, obviously, I could be dead wrong. Maybe we go up for another 4 or 5 days. But I think if you were looking to play this momentum, the easy part of the move, I think, is already unfolded here. And a big part of that easy move, you're trying to catch that long as volatility is dying down. So certainly keep an eye on that chart here. What this all kind of says to me is if I was long, probably a pretty good spot to start taking some profits. And you don't have to short the market, but maybe kind of trim some profits here and get out of harm's way, just in case VIX does come and spank everybody. But in terms of what we got here for open positions, and I'm not sure, when did we talk last Wednesday? I'll give you the month of October. So for closed and open trades in October, post Tesla here early in the month, we did an iron condor on the SPX. That worked out well. We did an iron condor on the spiders. That worked out really well. We bought back IWM for, it was small profits. I'm going to call it break even. But no bloodshed on IWM. And then we have that lottery ticket short down there at 4,300 on the SPX, which obviously at this point, that trade's not working. But one thing I hate to see from traders, and I'll tell you why I hate to see it, is you take a trade that has, a lotto trade, right? A trade that has huge potential if it works in your favor. What I hate to see is that starts to go against you. A lot of traders just kind of sit there and watch it happen, right? And to me, that that's an emotional reaction. You had your hopes up for that trade. There's something going on there emotionally where because that one trade isn't working, you're just sitting here doing nothing, taking it on the chin. So I think instead of doing that, you look for your next good setup. So while that trade isn't quite working for us at the moment, we're chipping away at things here. So out of IWM at break even, and we sold the put credit spread on the SPX for Friday's expiration, which we should get our 80% here today, 80% of max profit. We've got a deep out the money iron condor on the QQQs that expires in a few days. I'll be taking 80% of max profit on a dip to the 21 EMA. Because of kind of the circumstances of this particular, I'm not the biggest earnings trade guy, but I like these big pushes into the announcement and then betting on less than an expected move. So we did the earnings trade there last night on Netflix. That looks like it's going to work out perfect. So the point is, one trade doesn't quite work for you right out of the gate. Look for the next best setup versus kind of sitting there and holding your head down. But that's really what I got for you, y'all. So it'd be a big month for us if the market actually did come down here back towards those lows before November 5th. But with the work that we've done on the condors, the put credit spreads, a few other things here, if we end up taking, as of right now, if we end up taking max loss on that SPX trade, we're still going to be slightly profitable for the month, which means over the next 2 weeks, regardless of the outcome of that trade, we get a few more trades under our belt. We've had a solid month here in a pretty nasty market. And if that comes back to break even, now it's a really good month. That trade turns profitable, now it's a big time month. But that's a key. And sit there, take it on the chin. Yeah, evolving Steve, absolutely, you could. I want you to take, trades like this, right? Whether you're buying, Delta 30 out the money calls, you're doing a deep out the money debit spread, where you're doing these trades that, what's a high probability short on the market, right? Kind of drive the point home here. Uh, a high probability short on the market is selling call credit spreads up here at 4,600. Now that probability is really stacked in your favor, and your risk reward is going to be a reflection of that. There's no free lunch on Wall Street, so the higher the probability of it working in your favor, the crappier the risk reward. Vice versa, you can kind of set up these lottery ticket trades where it's not the highest probability trade going, but because of that, there's a much different reflection on the risk reward. You're risking 3% of your account to make 8, 9, 10% overall return. But the key with these kinds of trades is to literally treat it like a lottery ticket. Now, if you go into the you go into the convenience store, buy a $5 scratch ticket, ideally you're not throwing a fit in the parking lot if you don't hit for 100 grand. Same kind of thought process here, meaning it could certainly make your month if the trade works, but it should not break your month if the trade doesn't work. So that's all I would say there, Steve. Structure, position size of that kind of mentality. Then I think you're good to go. Sandy, for open positions, we got did the earnings trade on Netflix. We did Iron Condor. We sold puts down here at 590, and we sold calls up there at 700. So we'll try to take that off here today. We have a Friday expiration put credit spread on the SPX with short strikes at 4,400. Yeah, 4,400. We have an Iron Condor on the QQQ. Short calls at 385 and short puts at 355. And then we have an in the money call credit spread on the SPX with short strikes down here at 4,300. I'm in playing with the Analyze tab last night. I think into next Friday, 4,350, that goes back to break even. Which is still decently above our short strike. We're kind of talking like minus one ATR, that comes back to break even. If you took the trade when I took the trade. But those are a few things I got for you there, y'all. In terms of what would I want to get long, I got a decent watch list here, so you can jot these down. Upstart looks awesome. Decent, I would say, daily squeeze and lucid. Crazy momentum in Affirm. Match.com is pretty solid. Capital One, well, they got earnings pretty soon, so probably not them. Airbnb is a pretty solid daily squeeze. I'd take some AMD on a pullback. I'd probably prefer a dip here on JP Morgan, but financials look good, so that's pretty solid. I'd take me a dip on NVIDIA, and I'd take me a dip on Tesla as well. Jason, so good question on like an earnings trade, like an Iron Condor like that. It all depends how it opens. So if this thing was kind of pushing, making, if it was right at or trying to kind of crack its expected move of about $30 up or down this morning, probably more inclined to take whatever profits on the table if my short strikes are a little bit deeper out the money. If it opens up relatively flat, we're at 526 here. Yeah, you're kind of like back in you're back in yesterday's range. I'd be a little bit more inclined to try to give it time. I mean, here's the reality, though, right? Put it this way. This is really important, especially if you're in the mastery, right? So we're all on the same page here. If SPX is trading down here at 4,200, and we're just bringing in some serious profits on that short, we ain't doing we're not doing a Netflix earnings trade. Right? The reason we're doing this Netflix earnings trade, the reason we're doing the iron condors, the weekly put credit spreads, is we're playing defense, right? And this is so important as a trader, especially in a difficult market. Uptrends are easy. Downtrends, which I don't call this a downtrend, but downtrends are easy. This kind of back and forth nastiness, that's difficult. So this is really where you got to put on your, play defense hat. We're over here, it's mainly 100% offense, pretty much. But the reason we're doing these weekly trades here, we're covering all that risk and then some. So as a trader, if 5-6 times a year, for conversation's sake, right, you think you have timing for a potential home run kind of trade, and to risk 3% of your account and grow it by about 8 to 9%, that's a home run. If you're risking 10%, you're making 50, 60, 70. So those are awesome when they work, but the real skill set, because where's the skill set in that, right? All right, we're going to sell a lottery ticket call credit spread, and now if the market just pukes all over the place, we're going to hit a home run. Yeah, it's a good entry, good timing. The real skill set here is, what do you do if that doesn't work? Do you sit there and take it on the chin, or do you take what the environment has to offer and start chipping away at it? If 5 or 6 times a year you can put yourself in a position for a home run trade, but then you have the skill set to basically cover any of that potential loss if it doesn't work, you're doing a lot of work, and you might not be moving the ball forward, but you're basically paying for the opportunity to get a really big bump forward. I think more and more as we grow as traders, that's a skill set we want to focus on, because otherwise it's all emotional. I set up a trade for a home run. Now you start fantasizing about it working, all those profits. It goes against you for a bit, and you kind of put your head in the sand, right? Garrison, do we try to fade Baba on bounces? Let's see. All right, let me clean up the drawings here. Now, this is not an uptrend, right? I mean, it's the furthest thing from it. So take this with a grain of salt. But this could actually be weighing, this could be setting up the better short here. The daily chart hasn't looked this good. I kind of hate to use the term good. But you finally have a positive histogram. You haven't had that since, June, July. You got green 10x bars, but, look at the backdrop. Monthly, weekly, 3-day, bearish momentum, no stacked DMAs. So yeah, a really good bounce here. On your daily time frame, I'd look to short it at the weekly 21 EMA. Because where the downtrend has the potential to stop is a few weekly closes back above the 21. Now, by no means does that mean that it just immediately takes off back towards the highs there, but a few weekly closes back above that weekly 21, it can at least just kind of take a breather. The buck kicking has kind of come to an end there. But it is in motion, right? It's in motion to the downside. So I'd be looking to short it. And if you're going to do call credit spreads, for example, I try to sell them above the weekly 21. If you're trying to get long puts, maybe wait for a little bit more of a bounce. And unless you're trying to hold that through earnings, you kind of get like 2 weeks here. So good daily bounce. But that was a good daily bounce right there too. That was a good daily bounce there as well. This suggests path of least resistance is to the downside. Negatively stacked DMAs, bright red 10x bars. Steve, let's take a look at a few of those. Mara. Let's see. So 1, 2, 3, 4, 5. So you're 5 weeks into firing your weekly squeeze, which you could have a few weeks of gas left. A good squeeze can give you, call it 5 to 8 bars. I think important to take into consideration, this is probably the easiest chunk of it, but there is the potential for a bit more. But you have to take into consideration, right? That was the easy chunk there. Now you're at +3 ATR on your weekly chart. You're at +4 ATR on your daily chart. I think it's something you'd want to buy in a dip here. If that weekly squeeze continues for another 1-2 weeks, if it continues into earnings, the dip to the AEMA, something like that, I think offers a better entry. And these weekly squeezes, I mean, they're tough. They're tough because it's chop, it's chop, it's chop. It's, getting ready to break out, comes back in, chop, 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 and then, boom, totally off to the races. So you've got a great trend here. You got a good structure. You got good momentum. But the easy move, I think, is already done and over with. So if you do get a dip here, that's where I think you'd want to snag some of that. Let's take a look at Riot. Futures are flat as a board. All right, so let's do this. Here we go. Let's get rectangular with it. Right. Now before we dive in here, right, I want to compare this chart real quick to IWM. Range bound on the weekly chart, right? It's really, really tough. So what you need to finally get, I think, price action that's easy to trade is a catalyst or, momentum. You need enough here to finally break out of this range. Otherwise, what tends to happen is these moves off the daily chart, they're very short-lived. Yeah, so you get your daily squeeze, you get kind of 1 day of action, you come right back in. You get your next daily squeeze, you get 1 day of action, you come right back in. Daily squeeze, get a little bit more of that time, it comes right back in. See how difficult it is to catch a move like this? That's what we're all looking for, that kind of momentum. And if you look at Netflix on the weekly chart, that's what it takes. Price action finally has to commit to trading out of that range. So with Riot here, I do know we got a lot happening with Bitcoin, etc. this week. It needs a catalyst. It needs a something. Now, until you get the big breakout, keep your trades, I think, short and sweet. Build your position up to 21, catch your pop into 34, 35, take profits, look to buy the next dip kind of thing. But yeah, the Bitcoin, I mean, this is pretty still grinding here. Now, to anybody's knowledge, are we going to get options on these Bitcoin ETFs? Because that would be interesting. That would be really interesting. You mean I can start selling put credit spreads on Bitcoin? Let's take a look at coin here real quick. Don't want to leave that one out. Too extended as well. And remember, too extended does not mean you have to get a pullback. It just means there's a pretty good probability you get long here and sometime soon you're sitting through a pretty uncomfortable dip. I am game. Thoughts on Google? What's today's date? So I won't do anything here until earnings is done and over with, which looks like we're lining up for next Monday. So I wouldn't do anything between now and then. However, it's a setup I would want to do something on. Daily squeeze, positive histogram, stacked EMAs, Boston Celtic action here. Bunch of green 10x bars. You get the neutral there on the daily chart. Something I'd probably want to buy on a dip back to the 21 EMA. Assuming, of course, this bad boy doesn't come back down towards those lows. Because as the Qs come towards the lows, what happens to old Googs over here? Google comes back down to earth. So this kind of fits in with the game plan. Waiting for a dip to the daily 21 before making the next round of decisions. That's not just an index thing. That's a Google, Tesla, Nvidia, AMD, Upstart, Microsoft. Same thing here. I mean, Microsoft's hitting all-time highs. That's what's difficult right now. Everything looking like it's going to puke a couple weeks ago. Very quickly, the market regained structure, and very quickly, anything you had on your watch list, you either got long quick or it took off without you. So I'm by no means really against getting long here on certain stocks, certain setups. We just much prefer to do that down here. But we'll see how earnings goes. That's going to be the interesting thing. I mean, Netflix was kind of the first one to go here. They're pricing in a $30 move. So they're looking for a move up to 570 plus. They're looking for a move down to 610, and we're going to open up inside of yesterday's range. Who's next? As far as big FANG stocks, 25th for Facebook, 28th for Apple, 28th for the Big Zon. The Big Zon. It's going to be a busy week next week. Going to be a busy week. Yes, Steve, it'll be interesting to see if that is the case there. At this point, not the easiest spot to get long. So I think what you're looking for here is short-term exhaustion of this bearish momentum that brought you up here. And ideally, you're looking to mix that with a sell signal. Here's what I mean by that. Where we did a trade in Amazon, not last week, 2 weeks ago in the options room, and you were oversold, but you waited for exhaustion, and you waited for a buy signal. Right along with the Qs in the S&P, we got that here on our 2-hour chart. And the 4-hour and the 1-hour, but we took it off the 2. So you're oversold on your daily chart, but then the bullish momentum, or the bearish momentum rather, starts to dry up a bit. Then you get your ready aim fire buy signal. Then you got a chance of catching a bounce back to the 8 EMA, a bounce back to the 21 EMA. The same rules apply here. Because you don't blindly get long Amazon because it's extended. You need exhaustion and you need a signal, most importantly. I mean, so if you're looking to short the market here, or you're waiting for that dip to the 21, you're looking for exhaustion and a sell signal. This is kind of the early stages of potential exhaustion. It's that shift of the histogram. Light blue, dark blue, ultimately looking for red. Some negative momentum. You get a few ready aim fire signals here, but they're back and forth. So what the hell does that give us to work with? And make sure you're looking at the stacked DMAs as well, the green 10X bars. Little bit of exhaustion here, but nothing that's going to put a dent in this just yet. Green 10X bars in your 1-hour chart. 30-minute chart. So I'd say you don't have any exhaustion or any sell signal here yet. Hey, Angela. All right, Costco. Let's see, cost. Ooh, very nice. I love it. On your -1 ATR, 50. This looks great. So structurally and momentum-wise, you probably had a 4-hour too. Yeah, look at that bad boy. I think the only thing that kind of stops this from at least testing, if not breaking through that previous high, would be the market starts to get really nasty. Otherwise, just based on the trend and the timing and the structure of the squeeze, everything looks pretty clear here for at least a move into 2 ATR. So beautiful entry, beautiful trade there. And then IWM is just as range bound as it can get. So it's going to be one of these things where most likely next week or so, I don't think we're going to get a major breakout here. Mind you, I also don't think we're going to get a major breakdown, meaning I don't think over the next 2 weeks this consolidation is going to be broken. Now the question is, are we above that 228? Are we at the top of this range towards expiration? Or are we at the bottom of this range towards expiration? So the advice I would give you here, Angela, is basically what we did in the mastery. This is kind of a headache, right? And when we sold the call credit spread, we were looking at a different structure. Bearish daily squeeze, no stacked EMAs. You had an argument there that this was shortable. But it just continues to be range bound. So every time it looks shortable on your daily chart, you might catch a quick flush, but then it's right back towards, home base. And every time it looks bullish, you might catch a quick pop, but it's right back towards home base. So because this could be so, on the fence back and forth, my biggest suggestion would be if you can wiggle out of there at a small profit or even break even, I'd get that capital back. I'd look for an easier trade. IWM will be easy for you over the next 2 weeks if it just completely flushes here. This weekly chart just gives you total pain in the butt. So that's my thoughts, Angela. And it's probably going to be one of those things where, you buy it back for break even, and very easily, it might end up being a max profit trade. Just as easily, it could be max loss. These range bound things are just so tough to gauge. But even in chop, I think we still respect structure and momentum. So even though it's a total basket case here, it has stacked EMAs, it has a positive histogram, it's got a pretty good looking daily squeeze. Not typically the thing we would want to have call credit spreads on. So that's kind of what made me want to just buy it back the other day for really small profits. It's not the same bearish structure it was when we shorted it. And it just continues to be a big old pain. Steve, in terms of setting up your charts like this, by any chance are you in the options room? Are you part of the simpler options room? If so, it's in the room drive. If not, guys, what I can do is I can just get rid of all the proprietary stuff, which would be the Squeeze Pro. So I'll take the Squeeze Pro off. I'll put on the regular Squeeze, the OG. I'll get rid of the Ready Aim Fire. I'll tweet out a chart link here for basically everything that's not proprietary. So the moving averages, the Keltner channels, the OG Squeeze. All right, Steve, you're not. All right, let me jot that down. Tweet out TOS share link for Evo Steve. Okay, I'll do that here ahead of the open for you, Steve. And if you don't happen to follow me on Twitter, up the handle right there. AT, you get a beautiful setup in Celsius. You can peek here. Great daily squeeze. You had a daily squeeze back here, right? Leads to a really good push. You had a daily squeeze back here, leads to a really good push. positive histogram. Positive histogram. Otherwise, what are we doing in the squeeze? Chopping. We're chopping. We're chopping here. Now, I don't so much suggest you wait until this daily squeeze fires. I don't even quite suggest you got to wait until you start getting positive, positive histogram on your daily chart. But if you don't quite have that momentum, on your daily histogram, just kind of take a look from the ground, from the top to the bottom, basically. So I'll look at a 4-hour chart. So 10x bars are neutral. Histogram is neutral. Not really screaming you better get long immediately. 2-hour chart's kind of neutral here. So I'm bringing this up to say you could choose to be patient with it and wait for a little bit more momentum to hit here. Positive daily histogram, you're looking for the same thing on a 4-hour, a 2-hour, a 1-hour, or at the very least, you would structure a trade here that gives this plenty of time. This was a great looking daily squeeze almost 3 weeks ago. 3 weeks later, it's still a good looking daily squeeze. And we hate to get stopped out of things or shaken out of things because we run out of time. Where the setup never does anything wrong, but we ran out of time. And I think one of the easiest ways to run out of time is to jump into a daily squeeze without doing a quick momentum check. The poster child for us in the mastery lately has been Netflix. Daily squeeze, positive histogram, stacked EMAs, green 10x bars on a monthly chart. It's like all the way down to the 30-minute at that point. So now in your consolidation here, you're building up a lot of explosive momentum. That's what you need to get the big push out of the consolidation. Otherwise, a daily squeeze is going to daily squeeze until you get what? Momentum. So that's what my only thoughts are on Celsius. Good looking setup, though. Good looking setup. All right, y'all. I'm going to cut you loose here, though. Market's going to open up in 7 minutos. So let me get that share link here. I'll tweet that out. And I wish you all the best of luck today. So just kind of quickly rehash here. Next round of decisions will be made here at the 21 EMA. Just can't start breaking every rule in my book, trying to get long out of desperation. So if we come down to the 21 and the internals look bullish and it looks like it's going to hold this support, I'm open-minded to getting some Tesla, NVIDIA, things of that nature. If we come down through the 21 and just give it absolutely no respect and keep flushing, well, then our short's bringing home some cash. In the interim, be impatient. But I wish you all the best of luck. Enjoy the rest of your day. Go get them. And Chandler will be live with y'all on Friday for his turn for some pre-market prep. Talk to y'all soon.